Right. Hey, good morning, guys. Thank you so much for jumping onto today's call. And for those of you that don't know, Sally and myself, we are business owners running our own brokerage in Durban, ES Brokers. We've had it for about 26 years. And like a lot of people, like a lot of brokers, you know, we know what we're doing, we know our content, but we're not experts in certain fields. So we like to surround ourselves with business partners and people who are experts, who can add those valued expertise into our businesses and our practices. And I'm really excited today because we've got an amazing individual that's going to help us. And you know, the purpose of today's call is to talk more specifically about a certain section that catches out brokers, catches out clients, because we don't pay too much attention to it, and that is business interruption. And you know, without further ado, I want to hand over to an incredible lady who is a chartered accountant by profession. She is also a business interruption specialist, and I like that because we don't want to be the cleverest people in the room, because we want to keep learning from the people who are experts in that field. And I know that she's going to add incredible value to those of you that are on the call right now today with us. And I want to hand over to Elaine Clarke. Elaine, can you hear me?
Hi, yes. Oh, can you hear me?
Yeah. Yes.
Okay. Okay. Morning. Hi.
Thanks so much for jumping on the call. I know you were a bit hesitant, but you know, business has evolved so rapidly this year that this is the new norm, doing everything online. So Elaine, first things first, tell us about Elaine Clarke. I know you're a chartered accountant. I know that you got into business interruption. It's one of your specialities. It's your strength. Let us know about you. What do you do and how did you get to be where you are today?
Okay, so yeah, I am a chartered accountant by profession, but I don't think I've done any actual accounting for probably like 12, 13, 14 years now. I fell into insurance. So I started off studying accounting. I did my articles, and then I actually really wanted to be a forensic accountant. I think it was the time of ShareMax where, you know, all these pyramid schemes and everything. So after my articles, I joined a little forensic firm. And from there, I joined Ernst & Young in their forensic department. And then I decided, oh, I don't want to charge time anymore. And I joined Alexander Forbes, but on their pension fund side for probably like 6 months. And that was not for me. And I had an interview with Marsh actually in their forensic accounting division. So I joined them in 2009 thinking I'm joining forensics, but it was actually all insurance. I think about a month in, I was like, guys, when are we going to do this, a forensic investigation or something? So, but it was actually their claims, their business interruption, division, or the claims division that fit, and my focus was business interruption. So I sort of fell into this. To be honest, I actually wanted to be a teacher. So this is very different to what I originally wanted to be. And so I was at Marsh for about 10 years before deciding to leave and start my own thing at the end of, October 2018. The main focus that I really wanted to do was, I guess maybe it is like a bit of the teaching, but I wanted to focus on the smaller brokers who don't have access to a forensic accounting division or claims division within their brokerage, and actually train brokers and train the insureds, etc., and help them understand BI. So and then, I guess I'm not all work. So when I'm not being a BI specialist, I really, really, really enjoy traveling. So this last 6 months has been a bit tough. I've spent more bed nights at my house in the last 6 months than I have in probably the last 5 years. So it has been a little bit tough. And doing like random saying yes to adventuresome things, like doing swimming for charities, even though I can't swim. So yeah, that's me.
So Elaine, tell me, in the business interruption space, what are your services? What do you actually offer?
Okay, so in that space, there's two, split it between pre-loss, so helping to actually set the sums insured, doing gross profit extracts. So having a look at the declarations that are provided by the clients to the brokers, having a look at that, the calculations, what have they included in as variable costs, etc., and commenting on that. And also commenting on the policy, but specifically on the business interruption side. I'm by no means a policy specialist, but more on, having a look at declared values and what has been put into the policy as uninsured expenses, and just some of the key extensions where I can provide some input.
Awesome.
And then on the post loss, just helping with actual business interruption claim preparation, so the quantification, submitting that to the loss adjusters, having the conversations with the loss adjusters, and negotiating the points in the claims.
Brilliant. So, those are all pertinent things that, we all need to take cognizance of in terms of BR. Now, you've mentioned things in your statement now about setting the sum insured, pre-loss, and obviously calculations. And I think let's go back to the very beginning. Me as a broker, I'm not an accountant. I've got an accountant that does my books. My client is probably in exactly the same situation. Maybe he just focuses on sales. Income and expenses, that's probably what most people focus on as a business owner, to keep their doors open, so they don't know about all the technical issues about it. So let's go back to the very beginning.
Okay.
Determining the gross profit figure. Now, we work on a difference basis, a majority of the insurers, so let's stick with that one. And from what I know in terms of the policy wording, we're looking at the sales turnover plus your closing stock, less your opening stock. So they basically cancel each other out. And then we need to add in the uninsured costs. Now, in simple terms, what we normally just explain to our clients when we say, what is your gross profit figure? Oh, I don't know. Or I have to speak to my accountant. That's pretty much how most brokers tackle the meeting. If I have to explain it to a client to try and make them understand what figure or sum insured do we work on, I would say your gross profit is calculated by obviously deducting your uninsured costs from your turnover. Is that correct?
Yes, that's correct.
Okay.
It is a little bit. That is it. I think the thing with business interruption is, the first point is I really do think it's important to get it right at the beginning. That just avoids a whole lot of complications when hopefully you don't have a claim, but if there is a claim, I think it's very important. But in terms of calculating the gross profit, it is different. I think the first point, it's very different to the accounting gross profit. And it's usually the insurance rates of gross profit or gross profit is usually higher than your accounting gross profit, because the accounting gross profit, sometimes they include, a lot of variable fixed costs, as variable costs in terms of their allocations. So when having a look at the uninsured costs or the variable costs, I think it does differ. There is a little bit of a generic, some generic or some items that can go and will be variable for all companies. But I think within industries and different businesses, etc., the same item could be a variable uninsured cost or actually fixed, depending on like contractual obligations, etc. But to start, sorry, I'm overcomplicating, but yes, to start off with, it's that formula, taking off the variable cost. But I think the main focus really is trying to determine for insurance purposes, is this cost actually variable for, in terms of insurance, and going from there. So I'm a little bit anti a copy and paste calculation for everyone, because I really do believe it needs to be interrogated.
So if I have to say to my clients, less your uninsured costs, your variable costs, what costs are we talking about? Obviously bad debts. Are we talking about stock and trade already?
So talking about stock and raw materials and packaging, those kinds of costs. But how I normally actually had a training session yesterday, and how I normally explain it and how it makes sense in my head is, a lot of people will try and classify a cost as fixed or variable, thinking if we burn down, this whole place burns down, this will stop, and this will stop. But actually you need to think, if we have two lines that run and we lost one line, what expenses will still continue? So in a partial loss situation, what expenses will still continue. You may have electricity that might only decrease by 20% because you're still running, others. It's not going to stop tomorrow. Or I'm trying to training. I know a lot of these costs that people think are variable for accounting purposes. Training is not variable. Like, training is not really impacted, or it's not a direct cost according to your revenue. Okay. So those are the kinds of things to have a look at.
Is salary
and
a variable?
Pardon?
Salary and wages, is that a variable cost as well?
No, I would say that generally salaries and wages is a fixed cost. Especially South Africa. It's not only limited to South Africa, but there is, if you had a fire today and you shut your doors tomorrow, there's going to be like consequences if you tell your employees, sorry, you're done, it's don't come back and I can't pay you. So I would say that I've seen in many situations where salaries and wages still continue, at 100% or even more, because in the same scenario of losing one line and you have the other line, then they pay the same salary, but a little bit higher because now they're running the same line at 2 shifts, but they have to pay overtime in that other shift. So it increases more than decreases. Okay. And I think even if you did have a full loss, you don't shut the taps on the next day. It's it's a negotiation. There's a retrenchment process. That retrenchment value, so that may be 3 months worth of salary, that would still be included in your gross profit payout. So I think it's very important. That's a big one. It's definitely definitely.
Clearing it up.
Okay, so basically, Elaine, let's chat. So first of all, I just want to make a disclaimer. We are not giving anyone advice here. We are really just discussing, what would happen in a catastrophic result where we lost our entire business. What are the things that we need to look at? And, why do we need business interruption? So from your point of view, what are some of the things that you want to highlight that you feel both the business owner and maybe the broker needs to consider? Because the broker is also a business owner. A broker could also have a business interruption loss. So what do we need to consider? What are the highlights that you have found over the last 10, 12 years that people really oversee or overlook and they kind of forget about it?
So I think, definitely, and I know I've probably said it a few more times, but I think definitely, I think people don't really put enough emphasis on getting that sum insured right. I think it's not a matter of, because for a lot of people, some of the people who are, the people who are sitting at the insureds, this is not their day-to-day job. They're accountants. They know accounting gross profit. They don't really understand, and I think it's because they don't understand what they are actually buying and what they're going to get, or if there is a claim. So I think firstly, is getting it right, but changing people's attitude back. And I think I've just noticed recently, so been doing a lot of claims recently for a lot of smaller clients, and I think people don't actually understand what they're buying. So I think what is really sticking out for me is that brokers, it is complicated. So I think brokers need to understand a simplified, just a little simplified blurb explanation of what they are selling to their clients, and even give an example or something, or have someone like me have a conversation, like something like that, but just really explain to the clients what they are paying for, and if something happened, sort of how a claim would work. Because I have been seeing that, if you've got a gross profit sum insured of 5 million rand, and now something's happened, people think they're just going to get 5 million rand. There's this gross profit number, I'm going to get 5 million, something happened. So I think it's really, they don't understand, it's calculating what would you have had, what would you have made. It's adding in any extra cost for the increased cost, and taking off savings. And I think that has actually been the biggest surprise, if I can call it that, that people have to actually, if they haven't incurred the cost, the insurers are now taking this money from them, but it's trying to explain to them that you can't be better off. So I think that's very important, is actually, again, educating everyone and letting them understand what they are buying. And I think that will be the starting point, because I think it will help a lot going forward. And then just in terms of, so that's on the pre-loss side, but then when you get to a claim, I think, and not to punt my business, but, I think when there is a claim, I think it's very important to involve someone like myself. I have competitors, whether it's me or them, I think it makes the process easier. And from the start, a lot of brokers, are hesitant, I think, to get help. I think they're worried that someone like me will point out problems, or, will make it look, will highlight errors on their part. But it's actually, I think, the opposite, because if we're involved from the start, we can identify if there are any problems and already start managing how to approach that and minimize the impact, whether it's underinsurance or a funny little clause in the policy, something like that, but rather manage it and manage the client's expectation, then they think for weeks on end that they're going to get, 100, and actually in reality, we're looking at 50, or so I think that's very important.
Exactly. And you also mentioned something, Elaine, understanding the policy and what they're paying for. And, we just give a gross profit figure. Now, there are 14 additional extensions available under the business interruption section, which sometimes doesn't get brought up in conversation, but we have the assumption that the client thinks they're automatically included. So which ones would you feel of most of importance, especially coming up at claim stage, where these extensions rear their head? Maybe the broker forgot to mention it, maybe the client never asked for it, and now we have this, well, it's not included, what now? So how would we approach that? And also, from a claims point of view, which are the ones that come up more frequently that you feel we need to pay, as brokers giving advice, we need to pay more attention to, so that we don't have that problem of ignorance, or he said, she said, or why didn't you, and those conflicts?
I think very much the customer and suppliers extensions, I probably, I think just maybe going back to, explaining what they have and what the cover is, maybe just a little bit more on that, is having a conversation when you sit down with the client, whether it's the first time you've been there or the 100th time. I think having a conversation with the client would be, and understanding the revenue drivers, the trends, the seasonal business, etc. And part of that conversation is asking them about the market, about their customers and their suppliers. If it's high risk, they only have one customer, or many, or the same suppliers. Do they have, a raw material that they can only get from one supplier, and that guy is sitting, I don't know, somewhere in, I want to say China, but it's been so overused, but I don't know, the Iceland or Greenland, and there's a volcanic eruption and we can't get it, or something like that. But so to identify those, obviously, because you don't want to be saying you have to buy the supplier cover and name suppliers, etc., and it's not really applicable. But so following on that conversation, but the most frequently used ones, I could say, are a customer extension and a supply extension. But even in saying that, again, it's explaining to the client what they're covered for, because I've done 1 or 2 claims where it was a customer, a loss of a customer, and the business was like 100 million rand revenue, and this one customer made up 1 million rand of 100 million. And then in a 5-kilometer radius, they had 4 other customers. And these guys were so adamant, that they needed to claim. They needed this 1 million rand, even though, so again, they just didn't understand what they were covered for. And so they thought they were covered for 1 million rand, but they're actually only covered for the gross profit. And again, because they had so many customers in that radius, there actually really wasn't a loss, because they just split that 1 million rand just went to the 4 other different customers in the surround. So I think it's going back to just understanding the client and, it's very important. It is a little bit more complicated than just, just that the numbers on a spreadsheet a generic spreadsheet. So sorry, I may have gone a little bit off topic there.
This is also that, insurance, people think it's a one size fits all kind of scenario. And I think that the client also has a preconceived idea in his head that he should be able to claim for all eventualities, where that is not the point. And I think what we need to do is we just need to start getting more information out. Whether they take the information or not is obviously entirely up to them. But I think that as educating people better is going to be, in everybody's favor and best interest. So Elaine, let's chat about some of the really exciting, complicated, maybe disastrous claims. A client will only experience a claim and be able to test his policy at claim stage. Brokers, I think, to the best of our ability, we are so highly regulated that we're trying to be experts in all the fields that we're in. But we don't really get to experience a section of a policy until we have a claim. And a lot of the time, we kind of excluded from the process because the assessors or the claim specialist takes over. So we want to start understanding and getting involved a little bit and hearing the stories about the claims. So, we've obviously seen some major claims come out here in Durban. We had all the big storms 2 years ago, and then we had that big major fire, down in Durban Central, which obviously changed the landscape of insurance cover, forever. But on the business interruption side, chat to us about some of the more complicated claims that you've had, or maybe the interesting claims that really stood out for you over the last 10 years.
Okay. So I'll take you through one where I feel like, it wasn't overly complicated, but just, how important, firstly, it highlights how important it is to get everything right. So it is my favorite example, so that I always give is I was asked to do a workshop for a big corporate, and they had a few divisions. And the one lady she was an accountant, she was insistent on depreciation and salaries and wages as a variable cost. And when I did the calculation, it would mean that if they had a claim, they would basically be close on 50% underinsured because that's their wage bill, and that was so big. And we argued, I don't want to exaggerate, but probably for 3 weeks, her and I went back and forth arguing, and she would raise her case and I'd just sort of shut her down, but try and be polite about it. And eventually we managed she agreed with me. I think there was peer pressure because I think 8 of the 9 divisions agreed with my adjustments. And that policy expired on the 30th of March. And on the 31st of March, it's very weird, the dates, but on the 31st of March, the new policy obviously came into effect at midnight. They had a fire at like half an hour into the new policy. And when that lady literally, she phoned me, I think that day, and she was just so grateful because she said she never thought, when we were having the argument, she never thought that she would actually be using the policy, the cover. And it was a big difference. It was a difference between like a 32 million rand claim and a 16 million rand claim. So, it wasn't it was a little bit complicated, but in terms of just as an example, like the relief I think I felt, because I somehow thought that, the policy was normal and ran from the 1st of April. But yeah, luckily it changed. So that's one example of just, getting it right and having the arguments with your clients, if they don't agree with you and you don't agree with them, rather force is the wrong word, but, have the argument and try and make a statement, because, you do know a bit more probably than you think. And then just in terms of an interesting claim, I did a claim for a wine farm about 2 years ago. And they obviously make the wine, and then they move the wine to another company to do the bottling. And then after it's bottled, it goes back to the main wine farm, and that's where all the revenue is earned. And what happened is the bottling company actually burnt, and then so company A had a lot of stock also sitting at the bottling company, and they had to obviously now outsource and everything. But the two companies were on separate policies as well. So it wasn't like one policy that covered both companies, which would normally, make it easier so that you just look at it, it's one claim. We had to do two separate claims. And company A actually should have had company B listed as a supplier. They didn't have normal just unnamed suppliers. They had only named supplier cover, and they hadn't actually named company A as a supplier. So it was a little bit complicated in terms of, that we had a few loopholes that we needed to try and go through and work around to try get the loss in company A, which is where all the revenue really sat, was sitting in company A, and to try and get that claim accepted and paid. So there was a lot of negotiation and communication and conversations with the loss adjusters, just on how to make it work. Because I think that's the other part that I think gets sort of lost, is the relationships that you build. Might be shot for saying this, but the loss adjusters aren't all that bad, and they are, they do have a mandate to adjust the claim, but some of them they are open to conversations and that. So that claim was luckily successfully resolved, but it could have been a lot worse. It was a large claim. It was close on 60 million rand. So it could have been zero, just because we didn't, look at the company structures, or not we, the policies didn't really address that missing link. So that one was pretty interesting. So it was more than just being an accountant. It was sort of like being a bit lawyerish and trying to interpret a policy too.
I looked at that one, Elaine, and I was the broker on that particular account. And let's say hypothetically, I had nominated company A, the bottling company, as my preferred supplier, and I listed them on my policy. If my total gross profit figure that I'd calculated for the year for my entire business was, let's say, 10 million, and 1 million of that was the gross profit from the bottling company side, will I then just add the 1 million as a supplied sum insured? Will I add it onto my gross profit figure, or will I deduct it from the gross profit figure and separate the two amounts? How would I work that out on the schedule?
Okay, so your declared value is sorry, I just want to clarify. So that 1 million is for the wine farm, not the bottling company. So we're talking about the wine farm.
No, the bottling company.
The supplier.
Okay, so ideally, I would say, ideally, first thing, I would probably have put them on one policy. So that would be my first recommendation. But if we're sitting with two different policies, so the wine farm, so say they made 10 million every year, their declared value would be 10 million, and it includes the 1 million from the bottling company. And yes, so then you would have your declared value as 10, and then as your named supplier, you would say bottling company and 1 million. But I mean, no. Sorry, you'd have you don't specify a value for each supplier. So you'd have a look and see on your named suppliers, how much what is the limit you need? So maybe the bottling company contributes 1 million to your gross profit. But if the cork company went bang, or had, meaning there's a fire, not closed down. So, and the cork, you couldn't source those corks anywhere else. And that the corks actually contributed 8 million of your 10 million. You would have a look and see, and you'd say, actually, named supplier limit would be the 8 million. And then under named suppliers, you would list the bottling company and the cork company. So you wouldn't specify for each named supplier. It would be, the maximum that you would need for those named suppliers. But you don't have to have everything. You can, get unnamed suppliers, which is very general. So I'm not a broker, so I don't know the costing of all of this. So that's my caveat, is I throw it out there, but I don't know how much it'll cost. But, you could get an unnamed supplier cover, we don't have to name any suppliers, but you have, you know, maybe the R1,000,000 is under unnamed because you've got this, and then any customer or supplier that exceeds the million, then you name them. And if something happened to come to the bottling company and we had the R1,000,000 unnamed, unnamed supplier cover, then we wouldn't have had to specify them. So what I normally advise is to have a look at the suppliers, you know, have a, you know, see how much it is. If you have like a few suppliers that if they something had to happen, an insured event happened there, and there was a bit of a break, and it may cause you a little bit of a loss, you know, and it falls under a certain amount. I don't know what amounts to actually put out there, but we'll just keep on with the million, and it falls within the million. You know, that's a safety. It's a bit of a safety net, because you don't know which supplier. You may have 100 different suppliers, and you know, maybe one of them might trigger that. But then have a look and see further which suppliers, if something happened, would actually result in a claim higher than the million. And that's when you start doing the named suppliers.
Okay.
Got it.
But I think,
yeah, got it. Elaine, you know what, I love what you said, and I think there's a shift coming in the brokering clients, insurer, assessor, and other suppliers like yourself or service delivery, is that it is becoming very relationship driven, and the complexities of the way we do business today, I think that brokers in the past have kind of felt like we were the targets and we were the guys in the middle, and we always got, you know, blamed for everything. You know, either the insurers blaming us because we haven't done X, Y, Z, or the clients blaming us because maybe we told them about the cover and they didn't take the cover. And at the end of the day, the client just wants his claim paid. But I think what I'm loving, where we're shifting our businesses and our approach in the insurance brokerage space, is that we are creating relationships with services like yourselves, and building relationships between the client, the insurance company, and obviously our assessors, and everything is negotiable. And I think that brokers, this is what I do want to take away from you today, is that I think that brokers sort of undervalue the part that they play in this whole circle. Is that at the end of the day, we are very valuable in the chain of keeping business and economy alive. And without us playing the part that we do, there would be a lot of people out there that really would have to shut their doors after a massive fire or even a partial fire. So, you know, I want to give a shout out to people like yourself, to the insurance brokers, because I do think that we are becoming a very integral part of business today. And I think that we should be proud of what we do, because in the past, you know, insurance brokers were categorized like car salesmen. You know, we weren't really valued that much. And I think that we've got to that point now where our services are really becoming so important in the drive of the economy, particularly here in South Africa. So I want to thank you for the value you're doing, and to the other brokers which are going to see this information.
thank you. Yeah.
Elaine, you know, before we close off, I just want to ask you, you know, in today's current business environment, you know, we've got treating customers fairly, we've got our record of advices. Which is the best approach or solution that brokers should take, you know, to making sure that they're obviously giving the right advice in terms of business interruption? I know you've covered a couple, but maybe there's one or two that we can chat about. And more specifically, for clients, understanding the cover and the responsibilities placed on them. And like Sal said, you know, it's easy for the broker to be the target or the person in the firing line, because let's agree, ignorance is bliss. Why didn't you tell me? Okay, well, why didn't you ask? And it becomes like a bit of a bonfight. It's more to get the information out there, and also to say, I'm responsible for giving you the right advice as a broker, but you as a client are equally responsible to read your policy documents and to ask the questions where you know your business. I don't walk in your shoes. I don't run your company. You do. So as a Mr. Client, can you please let me know, what are you responsible for in terms of your policy? So is there anything that you'd like to cover, just wrapping those two up, just so that we're all on the same page, broker giving advice and clients being responsible for asking for the assistance that they need and reading their documents?
I think mainly probably to start with, just, you know, for the broker to make sure that they do engage with the client, and it's not just here's a declaration form, you know, fill it in. and maybe, you know, make it part. I don't know how, I mean, I think some brokers, you know, depending on the clients, you know, they have the whole pre-renewal, etc. But I think there is also on the smaller clients, I think it's a lot that just rolls over. Sorry, I'm sitting outside and there's a whole lot of dogs, but so I think maybe, you know, making time, whether it's a big client or a small client, just to, whether it's a phone call or a face-to-face meeting, to maybe just have a catch up and you know, understand with what's happening with their business, I think would be great, because then you can give that declaration form and ask them to fill it in and advise them a bit. But when you receive it, you can actually, you know, interrogate it and be like, this doesn't really, you know, we had this conversation, but you said that you're doing this massive marketing campaign and you were going to increase sales by 20%, but your revenue is the same as last year. You know, so I think a little bit of, you know, the engagement. I think making it clear to the client as well that, you know, you can offer up this advice and you can give them the calculation, and you're there if they have any questions. But ultimately, you know, they need to reach out if they don't understand it, because if they don't, then you assume that it's probably they do. So yeah, this is not very like it's difficult to put it down, you know. It's very much I wanted to say not airy fairy, but it's like out there. But I think it's very it is that, and from a broking side, you know, if there is something you do disagree with, definitely put it in an email and put it out there for a discussion point. Like I've had one client recently, depreciation, and we've been arguing depreciation. They are adamant it's a variable cost, and I'm just like, don't do that. Like that is, it's you know, explain the implications. If there is something that you see that is like glaringly, you know, worrying you, explain what is going to have all the consequences if something happens. So I think that is the most, and then also if needs be, get someone like me involved, you know, just to, again, as I say, either have a look at the calculation or have the conversation, a 10-minute conversation with the client, and maybe we have an accountant to accountant talk or something like that, so to try and explain to them exactly what we're trying to achieve.
Brilliant. You know, we've had numerous takeaways from what you've discussed in those 30 minutes, Elaine, and I really want to thank you for the time and the value that you've given back to us. Now, this information is going to go viral on social media. So for the people that don't know you, we spoke about pre-loss, post-loss. Can you please how can someone get hold of you if they want you, you know, to do an assessment of your business? A broker wants to utilize your services. How would somebody get hold of you?
They can give me a call. I don't know if I should be putting my number out or not.
Well, would you like them to phone you to get business? If you do, give us the call. Give us the number.
Or maybe I can pay for them too. Yeah, no, that's fine. You can give me a call. Or actually just email me is probably easiest, because I feel like in these times a call, I'm probably on a call normally, so it's best to just email. So it's just Elaine at Elaine Clarke with an E at the end, .co.za. And you know, anything I can send up, I've got brochures, etc., that can explain or just have a discussion.
Perfect.
Awesome.
Probably the easiest. Thanks, guys.
That, you know, small and big business owners, as well as brokers and intermediaries, you know, would have some value connecting with you. And we look forward to maybe having you on another call. Maybe we can discuss claims more in depth, because that's where we most definitely learn. So appreciate you. Have a great day. And thanks for being on the call, everybody.
Thank you so much, guys.
Thanks. Nice chatting. Thank you so much for the time.
Thanks, pleasure. Bye-bye.
Awesome.